Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to your ISE Equity Index Outlook for July 12, 2010. This is Patrick Ceresna. As always, we start off with a chart of the S&P 500 using that spider exchange traded fund symbol SPY. For the last couple of weeks, we were identifying the flagging formation on the upside that was going to find overhead resistance around that 113, 115 area. Subsequently, we got a breakdown below that 105, 106 level, and we were really looking for continuation selling to push potentially even as low as the 96 to 100 level. Now, the 100 level actually was tested on the futures level as the S&P futures hit 1,003 on the downside, but that happened sort of in the pre-market area. The key thing that we're now seeing is a legitimate bounce off of a breakdown attempt. Now this bounce right here has had 3 days of follow through, but it's still not enough evidence to indicate that this pattern will not finish playing itself out. We're watching this level right around this 107, 109 level right here, because if this is just a false rally attempt to unwind the oversold state of the market, then we should see early this week the market rejecting this level and begin selling on the downside. So the next 48 hours are going to be critical to see whether or not this is going to be continuing down on the downside and finally finish testing into that 96 to 100 zone. In the same regards, if the bulls are able to overcome this 107, 109 level on the upside and attempt to even push the previous highs up around this 113, 115 area, that would immediately neutralize the market, and we would have a far more of a neutral sideways perspective on the market rather than one that's outright bearish. So at this stage, we're very suspicious of another bearish leg down early in this week. But again, if the bulls dig in and actually make some positive price action above these levels, we'll start to look at the market far more range bound. Next year, I want to take a look at the ISE U.S. Regional Banks Index, which is a symbol JLO. We had a downside target in this 20.5 to 22 area, suggesting that that's where we were anticipating this leg of the move to go. Very short, quick test into that target zone and a very robust counter rally on the upside, which is now starting to push toward the 25, 25, 50 area on the upside. There's really been some strong follow through in this sector. We expect, even if it does have one more update toward the 25 level, we expect that level to bring in some profit taking, but so long as profit taking is contained, we could see much more neutral price action. In the bigger picture though, if the whole markets roll over and this rolls over here, we would expect it to fully test that bottom zone one more time, but certainly some very positive reversal candles coming here. Next year, I want to take a look at the ISE Syndex, which is a symbol SIN. This is an index of all the casino, tobacco, and distiller companies. We basically saw the selling coming down toward that 96 to 100 focal point that we've now adjusted down at the bottom end of where all those lows came in, and subsequently have seen some reversal bounces here. This area right in here on the upside, it'll be very interesting, because if the S&P rolls over off that 107, 109 level on the spiders, then we should see the Syndex stall right in this 106 to 108 level and then roll back on the downside as well. So if we have the S&P rallying higher as well as this breaking above this 108 level on the upside, that would be a positive for the Syndex and probably open the window for retesting up into that 113, 115 area on the upside as well. But we'll be watching the price action right in this area to see whether it rolls back down for another full test down toward the 96 level on the downside. Next year, I want to take a look at the ISE Home Builders Index, which is a symbol RUF. The Home Builders Index has been relatively weak versus all the other sectors. You can even see here that the rallying has been very shallow in comparison to other sectors like those regional banks and so on. And so what's happening here is that we're suspicious of this, the sustainability of this at this moment. We have seen at least some sort of a short-term low here, but if the home builders go through another round of selling, the major support going back several years lies all the way down in the 7.5 area. So if this ends up being just a little flagging formation on the upside that rolls back down, look for the next major support line to be all the way down there. Next here, I want to take a look at the ISE Natural Gas Index, which is symbol FUM. The natural gas stocks had a very, very dramatic round of selling coming off that 108 level a couple weeks ago. Again, found some very nice support right at that 89.91 zone where it put in its May lows. At this point, we're getting a bounce higher, but we have to be a little bit careful of what we have here, because just like we've seen in a couple of the other indices, if this ends up being a flagging formation that fails in this like 98 to 100 zone, subsequently anything that rolls over here could easily come down and test down as low as the 80 to 86 level. Again, what we're looking for anyone that's bullish these indexes, you need to see follow through not only in the S&P and the other indices, but you want to see this be able to overcome that 102 level on the upside and get it right back to the upper end of that range. If it does, it makes the natural gas index have a much more neutral sideways kind of pattern, rather than one that's deliberately selling and has significant selling pressure. So it'll be very important in the next 48 hours to watch whether natural gas rolls down off of this level, or whether the bulls can follow through to the upside. Next here, I want to take a look at the ISE Mini FTSE 100 Index, which is a symbol UKX. The FTSE is exactly in the same boat as the S&P, more or less. We had a flagging formation with downside targets lower. In this case, we have targets as low as 440 to 465. And subsequently, we've seen a snapback rally that's come to a critical turning point. If we see the S&P as well as the FTSE all rolling over off of these levels in the next 24 to 48 hours, another round of selling back down toward our target zones is a realistic outcome and a target to have on the downside. Subsequently, if the FTSE can make its way all the way back to previous highs around that 530, 540 area on the upside, it immediately neutralizes the price action for the next several weeks, and will allow us take a lot of that immediate bearish sentiment out of the market. So we'll be watching what in the next 48 hours what the bulls and bears figure out at these levels. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.